That kind of change for us all is no free stuff.
Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump administration.
Hi, Dewald. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
All right, legends, welcome to another live stream. Just want to fix something over here, turn my camera ever so slightly. Hope you're all having a fantastic Wednesday. It is what, 6 o'clock here in South African time, night time here in South Africa. So yeah, we are where I'm going to do just a little bit of technical analysis. I just really love this song, legends. You know, when I put the song on before I start the stream, I was like, no, I need to listen to the song while I'm trading as well, because it's quite a long remix. It's like a 4-hour remix, and there's about 4 songs I think inside of this song. So you all only get to hear the first part of the song. So I'm going to pay attention, because there's a part of this song that I really, really love, and I'm going to jam it up when we get to that part. Right, legends, remember to smash up that like button on your way in. Let's do a little bit of technical analysis. A lot happened today. A lot happened today. Right, the pro members. I see the mods here in the house. Always appreciate the mods. Mr. Vegas Claw, welcome. Right, Jaroon, welcome, man. Alex B, let's go. Chili Burgers, right, let's go. What is this for a remix? Yeah, it's a song that my brother produced for my brother's a song producer, so he made the song for me so that I don't get copyright strikes here on YouTube, because there was once where I played very softly in the background, just iTunes music, and then I got a warning from Bitcoin to say that they're gonna from YouTube saying that they are going to remove the video from my from my YouTube channel. Anyways, legends, let's start with a little bit of technical analysis. Welcome, QT me, Dewald, good evening to you. Like smash, thank you so much. Johnny, cheers, man. Let's do some technical analysis. So today was a very interesting day. This morning, myself and Andy hopped on a call because the conversation started. Andy, okay, Dewald, do you know what the hell is going on here? Because it's very choppy, it's very overlappy. Is it bullish? Is it bearish? Okay, and right, myself and Andy jumped on a call and we analyzed the living hell out of this little structure over here. But I mean, we do agree on a couple of things, I must say. Myself and Andy do agree on a couple of things, but it's when you put your heads together, that's when the magic happens. Yes, but what about this? No, it can't do that because that's been invalidated. So, oh, I need to remove this comment here from the screen. So today I'm going to share the technical analysis over here inside of this structure. So for the Legends Pro, for the Pro community, okay, link is always down in the description for the Legends Pro community. Here you go, the Legends Pro community, if you'd like to join the Legends Pro community, because this is what I analyzed this morning. First, I started off the day by saying, busy analyzing the chart. I really want us to get into high probability trades and don't want to just post a setup for the sake of trading, trying to force a trade. Because often, you know, when I used to do just trading by myself, just all by my lonesome, and I didn't share trades with the community or on YouTube or anything like that, there were days where I did nothing. There were days when I stayed out of the market, especially when it just didn't make sense to me. I would just say, stuff it. I'm going to take a weekend away or a couple of days off. I'm going to do something else. I'm going to come back to the charts, and I need to wait for the chart to make sense before I will start trading. But then soon after, okay, this was at 10:30 this morning. Okay, 15 minutes later, I posted this setup and I said, guys, this is the highest probable setup that I see over here. We have formed a contracting diagonal to the downside. This looks like it's forming a three-wave structure to the upside. Here by the 1-to-1 extension, 1.236 maximum target, 1.618. This is the zone where I'm looking for the short. But this daily level looks very interesting, okay, because that's where the confluences align, and I highlighted these three pivots as well. As you can see, okay, three pivots. Swing failure, you basically grab the liquidity above those pivots. You stop all the early shorters out, and then you fall to the downside. Well, we all know what happened over there, right? So this was the setup. I think I still have, I have so many folders saved today because I really analyzed so much. Here we go, right? This was the setup on the 5-minute time frame, okay? I didn't change anything. This is exactly how it played out. Right, got the rejection at the C point, 1-to-1 extension, 0.5 Fibonacci, rejected, claimed the liquidity above these highs, and bam, we fell here to the downside. Absolute amazing trade. But it didn't stop there, guys. It didn't stop there, because I knew, looking at the structure, I was like, okay, while price was trading over here, and while price was trading over here, I was looking at the structure and it's like, okay, well, if we do fall, maybe this is a mini ABC here to the upside. Maybe it's from a timing perspective, it doesn't make any sense. Okay, this is the highest probable setup that I was waiting for, specifically from a timing perspective. It's too short of a retracement to just start falling. But then I told the legends when price was over here, if it does fall here to the downside, this could be an ABC. And then I highlighted the long setup over here a couple of minutes later. Okay, this was 10:42, and then a couple of minutes, well, an hour later, almost an hour later, I highlighted this trading setup, but you can see where price was. And I said, guys, from a longing perspective, this is where I'm, pay attention to the green box that I have over here. 786 1-to-1 extension. I'm not sure if you guys can see it over there. 1-to-1 extension. We have a naked point of control that was formed inside of this consolidation area. That is where I will be looking for a long. And well, going back here to the price action, that is exactly what played out, right? We had, let me say, point of control. That is where we got the bounce, at the point of control. And this is where my little green boxy was. So we nailed a couple of trades. This is where my green box was, kind of like to be. And the 1-to-1 extension was basically from the high to the low to the high. And we got the bounce also, okay, exactly at the 1-to-1 extension. So when you have confluences lining up with Fibonacci levels, it really becomes powerful, and you need to pay attention to those levels. That is where we got the bounce. And then I posted, just before the live stream, and well, while the trade was playing out, I just said, I hope anyone got into this trade. Nice reaction so far. We tapped the 1-to-1 extension. Position should be protected, so it means it's a free trade to the upside. And I do see massive bearish CVD building up. Meaning, aka, please pay yourself on the way up. Don't just rely on this trade to come and claim the highs before you start taking profits. Okay, because from a CVD perspective, I mean, right, look at Bybit. Look at little Bybit, Mr. Bybit over here. Bearish. as hell, okay? Just bearish as hell, even from this little pivot, bearish, okay? So we do have bearish CVD building up, but now with this little retracement that we're seeing over here, we're getting bullish CVD as well against this pivot, which is perfectly fine, because if you get bullish CVD, it just means that you could form a three-wave structure and then reject again to the downside. Right, so there's also something that I need to clarify. I don't want to forget. Okay, I don't want to forget. There's something that I want to clarify that I spoke about yesterday that created quite a stir. Okay. Right, legends. So basically, successful short, successful long. Okay. Always the lows is such a great profit taking area. So if you did enter this short over here, right, you should have taken profits here to the downside. Leave a moon bag open for lower levels, but don't just not take profits and then you get stopped out, okay, with nothing after entering a successful trade, right? Just, you know, pay yourself. You've worked hard for that entry. Okay, and now again with the long, not guaranteed that you're going to come and claim the high. When you start hitting resistance like price is doing now at the moment, it becomes a great profit taking area. Okay, so beautiful long, beautiful short. Right, now the question is, what's next? The question is now, what is next? Okay, so I can take this point of control out. It served its purpose. I'm not going to use that anymore. So, right, legends, now what I want to see, okay? Remember, before I get into the trading setups, I just want to tackle something that I spoke about yesterday. I got so many questions, personal DMs, and inside of our free chat yesterday, also, if you would like to join our pro community, link here down in the description, there's a free section as well where I dropped some alpha last night, okay? So in the basic chat, the free section, I highlighted a couple of things. You're quite busy over here. Last night, myself and Rect City, I'm not sure if you're here in the live stream, okay, had a conversation here last night and basically discussing what I closed the live stream off with. Okay, so I'm not going to read through everything over here, but I highlighted a couple of structures that I'm currently keeping an eye on because I got a lot of questions when I made the comment yesterday to say, thank God we tapped the 0.618 and thank God we tapped these little pivots over here. Okay. That little pivot tapped the 618 and it claimed that pivot and it claimed that pivot. And yesterday during the live stream, I said, thank goodness, because now that tells me that this is a corrective structure and it's not an impulsive structure to the downside. Okay, I want to clarify, it does not mean that you cannot take the low again. Right, so what I mean by an impulsive structure, if this little pivot over here, okay, if this little pivot taps the 0.618, because we were looking at it from this pivot over here, I think, which it did, okay, you invalidate a fourth wave to the downside, because we were looking at this structure as a 1, 2, 3, 4, which is now invalidated 5. Okay. So the fourth wave has been invalidated. No more fourth wave, which means that even if you claim the low, the structure is corrective and it's not impulsive. Why is that important? And why did I get so excited yesterday when I saw that? Okay, because some people made comments to say that Dewald, from my understanding on how you explained it, it means that we're not going to claim this low. No, okay, I just want to correct that understanding. You can still claim the low. The reason I got excited when I saw that is because it's no longer a 1, 2, 3, 4, 5. ABC 1, 2, 3, 4, 5. Which means that if you start, okay, to form impulses to the downside, I need to jump here into the larger time frames. This is the danger, guys. This is why I got excited. Okay, because if you start forming impulses to the downside, 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5, ABC, 1, 2, 3, you have a good chance that you can come and claim these lows again. That is the danger about impulses to the downside. Okay, because I'm trying to figure out, is the high in and we're just gonna fall from here and claim the lows again? Or is there a chance that this is corrective and we are still going to move up again? So based on what I explained here yesterday, it means that we've invalidated an impulse to the downside, which means that even if we claim the low, it's part of a corrective structure that's correcting this impulse, increasing the probabilities that it doesn't matter how deep it goes, it's most likely going to create a higher low and claim the damn high again. That was the importance, and this is why I got so excited in the live stream yesterday, because we tapped the 0.618, because it invalidates an impulse to the downside. Okay, I hope that makes a little bit more sense. Now I want to discuss a couple of structures that could be forming here. Okay, so that impulse has been invalidated, but it does not mean that you cannot take the low again. It's fine if you take the low after the impulse has invalidated itself. Okay, I must say that there is still this little bad boy over here. Okay, 1, 2, 3, 4, 5, which some people are looking at. Okay, it's not an impulse. Why am I saying it's not an impulse? Firstly, this little pivot. Okay, let me put a line on here, on number 1 over there, overlapped. Okay, so if the fourth wave overlaps into the territory of wave 1, okay, if it overlaps like it did, well, yes, me and this pen, okay, if it overlaps, then you have to think about diagonals. Okay, and this is why I then said last night, well, okay, is it a contracting diagonal? You take it from 2, you drag it to 4. Okay, you take it from 1 and you drag it to 3, 4, and 5. Okay, now this is where the problem is. This is where the problem is. Okay, because it's expanding. Remember, guys, if you take a parallel channel, guys, this is the effort that I go through to analyze these structures to make sure that I get my the probabilities right, because I trade probabilities. Right, so if I take, where the hell is the parallel? Yeah, if I take a parallel channel, okay, and I connect these pivots, you can see that this third wave, okay, broke out of the parallel channel, which means it's an expanding structure, which then impacts the probabilities dramatically, because an expanding structure is incredibly rare in Elliott wave theory. I've done a lot of research, even yesterday and this morning, a lot of research in terms of how rare is it. When is the last time, or how many times in the history of Bitcoin have we seen an expanding structure, especially on the larger time frames, like the 1 hour and upwards? And it's only happened once. And that one time that it happened is still under debate, because the Elliotians are fighting amongst themselves to say that, no, it's this structure, it's a WXY, it's a this structure, whatever the case might be. So from the research that I've done, it is estimated that an expanding structure, especially on the larger time frames, has only happened once in the history of Bitcoin. And that was in March of 2023. Okay, I can go through that, but I'm not going to spend time now. Maybe we can go through it maybe tomorrow, or, on another day. March 2023 is where they speculate the first expanding structure has happened in Bitcoin. That is how rare it is. It's not something that happens once a month or once a year. It is something that could happen once in the lifetime of an equity or a commodity or something like that. They are extremely rare. So for this to be a 1, 2, 3, 4, okay, it's allowed to overlap if it's expanding structure. 5, ABC, and we fall and we go and claim the lows at $74,000, carries very low probability. Unfortunately, it's never invalidated. Of course, the market is here to surprise us. What if it happens for the second time in history? Okay, but I trade probabilities at the end of the day. So in Elliott wave theory, what it states is that if you see an expanding structure, find something else. Okay, because an expanding structure will only be considered once every other single scenario that you could possibly think of fails. right? And this, guys, this is expanding. It's not, is not contracting, okay? It broke the parallel channel. So I just wanted to highlight that because I see there are some people in yesterday's chat that also highlighted this little structure to me. Right, so let's take the noise out. And this just highlights why I got excited when this happened. Okay, when that happened, I got excited, which told me that even if we don't come and claim the lows, the highs, at $112,000 right now, okay, there's a high chance whatever happens over here, very high chance that we're still going to come and claim the high before we claim the low. That's why I got excited. So that now opens up the door for my altcoin positions. You know, should I open up swing trades? You know, there's a lot that I need to consider in terms of what I see forming over here. Okay, and that is also why in yesterday's live stream, I was harping on this little structure to say that you cannot start an impulse like that. Okay, three-wave structure here to the downside. 1, 2, 3, 4, 5. That doesn't make any sense to me. Okay, I'm not going to go into those details again. So it brings me to a couple of other possibilities. Right, so legends, now let's take this little line out the way. Because I trade probabilities, even if the structure continues to the downside, for me, the probability is much higher that it's a corrective structure and we're still going to go claim the high before we claim the low, which tells me that I should be looking for longs. Especially, you know, from a spot bag perspective, maybe from a swing trade perspective. Okay, there's a couple of ways in which corrective structures can take place. The most common corrective structures, there's two of them, okay, is a flat. A flat. You can see it's a three-wave. 1, 2, 3. It's a three-wave structure where you basically have an A, a B, and a C. Okay. The B wave claims the liquidity above the highs, and the C wave claims the liquidity below the lows. And this little structure that I'm highlighting over here plays out extremely often on a daily basis. On the 1 minute, 5 minute time frame, I see them all the time. They are extremely common, and they are specifically designed in the market from a market maker's perspective to wipe out early shorts. Okay, it wipes out early shorts. You can just imagine the liquidity that's building up over here. People are saying the top is in, we're going to fall down. So a flat structure is designed to reset the market. So it makes the world bullish. Oh, we're going up, the bull market's back, we're going to $130,000. What happens over here? More liquidity starts building up over here. A massive liquidity pool. Okay, so this drop makes people bearish. And this pump makes people bullish. So you have liquidity building up and liquidity building up. And what the ABC does is it wipes these people out. It wipes these people out. It resets the market. It resets the funding rates. And then the bull market continues. This is the most common corrective structure because it's designed to clean out the market before it continues in the direction that it needs to go. Right. And then the second most common corrective structure, which also plays out on a daily basis on the smaller time frames, is just a normal zigzag. Normal zigzag, okay? A, B, C, W, X, Y. Doesn't matter if it's a ABC, W, X, Y. Doesn't really matter. The targets for me are exactly the same, right? But it's just a normal zigzag where your B wave does not claim the highs. And it rolls over, you make your C wave, and then you have a nice little large corrective structure that then continues the bull market to the upside. Okay, so these are the two structures that I always keep in the back of my mind because they're the most common, and I trade probabilities. Okay, so, right. Now, there we go. There we go. So I can also do this. Right, to say that, well, it could also be an ABC. It doesn't matter, okay? Just going to leave it like that. But you're looking at a three-wave structure. So what I want to highlight over here is that, okay, now that I've gone through the higher time frame analysis and explained to everyone why this is not an impulsive structure anymore, and it's more of a corrective structure, because this pivot claimed the pivots over here, tapped the 0.618, we invalidated the fourth wave. Beautiful. Now I'm looking at larger corrective structures, which means that we can still claim the damn low. Okay, I think this was the most confusing part yesterday, is that for some reason people thought we can't claim the low anymore. So it's now you go in guns blazing, you're long with your entire account, we're only moving up from here. Yes, we can in a flat A, B, C. Yes, we can move up from here, but it's not guaranteed. Okay, right. So legends, from a practicality perspective, okay, I now need to figure out, well, is this X wave or the B wave, is it done? Is it finished? Was this the local top? And now we are going to form impulses here to the downside to create the Y wave. Remember, a Y wave most typically is a three-wave structure. A, B, C. It's a three-wave structure. Okay, like this. Look at this. 1, 2, 3, and a W. Complex corrective structure in an X, and then you get another 1, 2, 3. Basically what happened over here. Okay, right, so then there's your targets here to the downside. Y wave can get quite punchy here to the downside, can tap the 1.382 at $94,000, $95,000, $97,000, and even, you know, I have seen many Y waves, okay, and some Elliotians will say that a 786 is a very rare target for a Y wave. I have seen many Y waves tap the 786, find support, and it starts reversing. So these levels to me becomes very interesting levels from a longing perspective, especially if you can start aligning these levels with daily levels, weekly levels. Okay, what is there support in this zone that maybe provides confluence? Yes, yeah, by the 1-to-1 extension above the highs. Maybe there's a point of control inside of this consolidation area. So when these levels align with other areas of confluence, it becomes a very interesting longing area where I want to build some swing trades. Okay, I know that I'm focusing here on the larger time frame, but I needed to clarify because I had a long discussion yesterday with some people about not taking this low again. Right, cool. So that is basically what I'm looking at here. To smash that like button for the Legends. Junior, welcome, man. Yeah, always appreciate the mod here in the house. Shorting Bitcoin to zero, stop loss at 275. Ooh, you're going to build an epic short position here to the downside, Mr. Vegas. Right. 100k Bitcoin Empire trades. There we go. Welcome, welcome. Okay, Legends. Now what I want to focus on is this little structure over here. This is now what I want to focus on. I think the biggest question on everyone's mind is the high in, or are we still going to claim that high and then maybe move to the downside to complete a Y wave? Okay, remember guys, the one thing that I do also just want to highlight is that when you take a fib from this high to the low that we've made over here and you drag it across, if this structure continues to move up here and it taps this little zone over here, then, only then do you start increasing the probabilities, okay, that you could have a Y wave that does not claim the lows. Okay, usually when you have a deep X that taps this zone over here, you increase the probabilities that you're either going to form a triangle, okay, or a flat. And then you're in your Y wave. But I mean, there's still a lot that needs to happen before we talk about that. So depending on how price develops, I will be here doing live streams, guiding us through each and every single way. As long as price, okay, is here by the golden pocket, 50%, or it rejects on where it is right now, there's still a high chance that you're going to get a three-wave structure to the downside and you're going to come and claim this damn low. Okay. And it can, you know, there's many other corrective structures, Legends, and I'm going to show you guys in this little area over here. I'm going to show you how confusing it gets. I'm going to show you how complicated it gets, and the amount of work that I put in the background, and then I try and only present the scenarios that make sense in order not to create confusion. Okay, because there's I'll show you guys. Remember to smash up that like button. And let's carry on. Okay, so let me take this out the way. Let's take the fib out the way. Now let's zoom into this little structure. Okay, now the question on everyone's mind, is the low in? Okay, the one thing, guys, I'm going to go into a little bit of confusing analysis paralysis at the moment. The one thing that I told the Legends Pro community yesterday, okay, is that even if the structure is very confusing and there are 100 probabilities in terms of how it can play out on the larger time frame, I can still trade it. Epic short, epic long that we took together today, right? We played the short, we played the long here to the upside. I can still trade based on the local structures that I see over here. Okay, I see a 1, 2, 3, 4, 5. Ooh, if we form a 3-wave corrective structure, claim this low, get acceptance back above, I'm going to long the crap out of this. Okay, I don't need to understand the bigger time frame where price could go if it's going to claim the high and a flat and go back down to and a WX. I don't care. I can trade these local structures from a day trading perspective. Epic long, claim the highs. Okay, epic short, claim the lows. Okay, epic long here to the upside. Also, this short that I highlighted over here, right? Epic short that I highlighted over here, absolutely just tanked here to the downside. So I can still trade this range from a day trading perspective, regardless of how confusing the Elliott wave scenarios can become, because corrective structures can become very complex, and unfortunately, it's inside of corrective structures where everyone loses their money, because they are very difficult to trade. Okay, most traders, I'm not going to say everyone, but because there are some really good channels out there, but there are some channels that I see on YouTube where people can only trade trending markets. They can do amazing things in a trending market. So the market only trends for about 20 to 25% of the time, and market ranges for about 70 to 80% of the time. So if you can only be successful for 20 to, let's say, maximum, if you can only be successful for 30% of the time, every day you spent in front of the charts, you're going to struggle as, to stay profitable. You're going to really struggle. You need to learn to trade ranging markets, because, there's that saying in trading that says a lot of people make money during a trending market and they lose it all when the price starts consolidating. Okay. Right, cool, legends. Now, this little structure over here. Oh, I have so many scenarios, okay? One of them is this little scenario, this little bad boy over here. Okay, I just want to take this out, where the corrective structure has potentially come to an end. You have an ABC and a W, you have a 3-wave structure in an X, and you have another ABC in a Y. Okay, so you basically have a double zigzag. So there's a chance that the high is in. So if the high is in, this needs to form impulses to the downside. Okay, and this is where I identified the contracting diagonal this morning for the short. Okay, this was this little contracting diagonal. Now we need to start building impulses to the downside. Okay, if this is the tippy top, price needs to start building impulses to the downside. So now you have your leading move in a 5-wave structure, 1, 2, 3, 4, 5, ABC, and now you have your first leg to the downside. So now this high should not be claimed. As soon as you claim this high, then you're most likely going to come and claim this high. So this high should now be protected, because this is now your next leading move that's starting to the downside. Right, 1, 2, 3, 4, 5. Maybe this is your ABC. Should not claim that high. 3-wave structure. It needs to be a 3-wave structure, and then you start moving down impulsively again. Then this is 1. This is 2. This is 3, 4. Can you guys see how price is going to fall to the downside? Okay, got a moth flying around here in my office. Right, so legends, from a trading perspective, it is actually very simple for me. It's very simple from a trading perspective. Because of the leading move, a leading move meaning a 5-wave structure, has to always have a partner leg. Okay, if you have a 5-wave structure and you have a corrective structure, you need at least another 5-wave structure, because you can have a 5, 3, 5. So there's a chance that the low is in because you already have a 535. 5, 3, 1, 2, 3, 4, 5. Okay. So this correction or this pump that we are seeing here to the upside is going to give me the information on whether we are going down or whether we are going up to claim the high. It's as simple as that for me. Okay, so let me clean up the chart over here. Right, let me clean up the chart. So legends, I'm now looking at this as how can I make it simple? I'm looking at a 1, 2, 3, 4, 5 here to the downside. Okay, now I need to bring in my Fibonacci levels. I take in my trend base Fib from the high to the low to the high. Most commonly your third wave finishes at the 1.618, then you have your 4 and you have your 5 that finishes around about the 2. It's just common targets. It can go more aggressive to the downside. I'm just trying to use common targets here to the downside. So let me put in the line so everyone can see. This is now what needs to form to the downside in order to take the low. Okay, now once you have that 5-wave structure, now you can see when I start zooming out here and I talk about a W, X, Y. Okay, now you have 5, 3, 5. That is how you can complete this structure with this move over here. So you have 5 waves to the downside, 3-wave corrective structure, another 5 waves to the downside. 5, 3, 5 gives you a Y. And then we continue the bull market to the upside. Right, so back here onto the 5-minute time frame. Then, if I take a Fib here from the high to the low that we've created now today, can take this out the way. Okay, if price taps the 0.88, then you start increasing probabilities of coming to claim that high. It's not an invalidation yet because you could also form a 1, 2, 1, 2, 3, 4, 5, 4, 5. Still an impulse, still a 5-wave structure, but it's just more aggressive to the downside. It can be a lot more aggressive to the downside. Okay, right. From a bullish perspective, okay, so basically just to summarize it over here, guys, is that if you've missed the short, there's potentially another way to get into the short. Okay, because when you have 5, 3, and you have now your first leg inside of your third wave, so this becomes 1, 2, 3, 4, 5 inside of your third leg, this is where you want price to top out. When you start tapping the 0.88, you increase the probabilities of claiming the high. Okay, especially if price had to claim this high, then we are likely moving higher. Okay, but it's also about how the price action moves up over here. So at the moment, we have a 2-wave structure. That's all we have at the moment. We have 1, 2. We need a 3, and if we get rejected over there, that's where I'm interested in the short, because you need a 3-wave corrective structure. It would be nice to get a little bit of a deeper 3-wave structure, but we don't always get exactly what we want, because I mean, look at this beautiful 3-wave structure. Reject, fall to the downside. Okay, if we form a 5-wave structure, 1, 2, 3, 4, 5, claim the 0.88, increasing the probabilities. The retracement is going to be very interesting for a long back to the upside. It's as simple as that, guys. I don't know how else to explain it to make more sense, because I use structures to determine whether I should enter longs or whether I should enter shorts. When I saw 1, 2, 3, 4, 5 this morning, I said, guys, well, if we make a 3-wave structure over here, I'm interested in shorts to the downside. And if you are in the short, definitely, leave some of that moon bag open, because you could reject over here and then come and claim these lows again in this 3rd wave. So you have an amazing entry over here. If you closed your position with profit taking, good on you. You have a successful trade in the bag, and you wait for the next trading scenario. Okay, often what happens, guys, is that let's say you form a 3-wave structure, you reject, maximum target 786, okay, and it starts, okay, well, that's where I'm interested in a short. Pushes up. If it does that 5-wave structure, 1, 2, 3, 4, 5, Okay, this three-wave structure usually forms a nice little trend as well. So if you don't know where to catch the low over here, you wait for the break of the trend. This is where I like to play the breakouts. When I see a 5-wave structure and a 3-wave structure falling, that's where I have high probability in playing the breakout to the upside. Okay. Let me go through some comments. Guys, for the best bonuses on the exchanges, links are always down in the description. I've got weeks, 20% cash back on the money you deposit in your features account, 25% discount on your trading fees. Okay, Bluffin has got that 15% cash back also. Money that you deposit in your features account, right? No VPN required. The best deals that these exchanges has to offer, links down in the description. And why not come and trade with me? Because it costs you nothing extra. Okay, you're not paying more fees, or you actually just benefit from using the links down in the description. Also your way to support the channel. Okay, so now let's go through some comments. Dewald, please mash up the like button in an amazing way for analysis. Thank you so much, Empire. I appreciate the kind feedback, man. Brendan Walsh, thanks Dewald. Absolute pleasure, man. Crypto Big Brains. Yes, there is the week's link if you guys want to get the best deals that the exchanges has to offer. Right. I did some nice scalps by using the Fib extensions tool on Doge. Beautiful, Bartman. Beautiful, man. Yes, I must tell you that the trend-based Fib extensions for me are way more powerful than Fib retracements. Okay, I mean, look at this. Okay, if I take this out the chart, just take this out. Okay, this is the level that I had this morning in that trade, from the high to the low to the high, without looking at anything over here, consolidation area, support, without looking at anything over here. I know that you are, when you form a 3-wave structure, okay, the 1-to-1 extension, the 1.236 are great longing targets. Then when you start combining it where we had a point of control here as well, they become even more powerful. So the trend-based Fib extensions for me are magic. They are magic. If you can learn to trade with trend-based Fib extensions, okay, they will really benefit your trading. What is the most leverage you have used on a successful scalp? I've used 500x. It's not the leverage that matters, it's the position size, okay? Because remember, you can use $1 and put it on 500x, and then someone shares their P&L and they've made 1,000%, but you know, they've made peanuts, right? It's about the position size, okay? Because I can take 10x with 50% of my portfolio, or 2x, or even 1x on my entire portfolio, and I can still make more money than someone that's using 500x. It's about your position size at the end of the day. So I don't care about leverage. It just depends on where your invalidations are and how tight your stop loss is, so that you don't get liquidated, or you don't liquidate your position when your stop loss hits. Right, cool. Like for example, let me use an example, Brendan, because you're asking a very important question. If I entered this trade, okay, at the 1-to-1 extension, and I was using this line as a swing failure line, okay, now I'm planning my trade. I put on my tool, I say, okay, right, I'm targeting, let's say I've just targeted that area for a profit-taking area, the consolidation area. I think it's going to provide some resistance. My stop loss has to go at the low, right? So now my stop loss is 0.16% away, which means that even if I trade a 200x position, I will not liquidate my position. I will get stopped out before my position gets liquidated. That's the power of swing failure patterns. Very tight stop losses. Okay. And the stop loss tells me how much leverage I can use, but I always trade with between 1%, maximum 3% of my portfolio at whatever leverage, doesn't matter, as long as I don't get liquidated before my stop loss hits. Okay. If I'm trading with 100% of my capital at 200x leverage, that is insane. That's insane. That I will do with a play account. Okay, I will do that with a play account. I won't do that for with my big portfolio. Right. But most of the legends here inside of the community, they've seen me place live trades. Okay, I trade very responsibly, especially with larger accounts, but I can get a little bit cowboy with smaller accounts. Okay, you need to make the trade worth it. It just depends on what your risk appetite is at the end of the day. So, to answer your question, leverage to me doesn't matter. It depends on where your stop loss where your stop loss is and how much capital you used in that trade. Dewald, how do you count the impulse up if this first wave is so long? Probably the third wave will be shorter. Yeah, I mean, right, I want to see a clearer structure over here. This could be 1, 2, 3, 4, 5. It could form a 5-wave structure here, but then this could be a A. Okay, this could be your A. Then you go back down for a B. Then you go back up for a C. And then you fall down, and then you have a 3-wave structure. Okay, it's just like you're saying over here, it's a little bit of a fast move here to the upside. It's very fast here to the upside. But here on the larger time frame, if I go to the 5-minute time frame, it still looks It looks like it can form a 3-wave structure. 1, 2, 3. Gets the rejection. Okay. Right. It's just not... I like a nice little lazy 3-wave structure. This is too quick here to the upside. So I would like price to fall a little bit and then go back up. And, you know, a nice 3-wave structure. They're not always easy. Sometimes I miss trades because the structure doesn't make sense to me. It looks like a 5-wave structure or whatever the case might be. But I do have my levels, okay? Because I can tell you guys now, I will have my level ready. Okay, so for example, I know I will take a fib from the high to the low. And I know for momentum to continue aggressively to the downside, it needs to reject before it taps the 8.8. Okay, so let's say price now pumps over here. It pierces the 786 and it falls down below. I can sniper that entry, put my stop above the high, and if price rejects a little bit further, I can protect my position. Which means that even if I'm wrong and price does continue to the upside, I get stopped out at break even. So I can sometimes, even if the structure doesn't make sense, I can have my level ready. If I get the rejection, I can enter a short. And if I'm wrong, I get stopped out at break even. Or even if I get stopped out, it's a tiny, 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 tiny stop loss. Okay, so yes, I need a little bit more. For me, at the moment, I need a little bit more price action to see if it's because now this could be your leading move. You have an A, B, C. Okay, it's a little bit, it's a little bit small here at the moment. I would like it a little bit more sideways. I don't know how else best to explain it. Right. Legend, Mr. Pac-Man, welcome to the live stream. Aditya in the house as well, one of the coaches in the live stream. Welcome, Mr. Aditya. Dewald, you're an absolute legend, man. I have learned so much, and I know I will learn so much more. Appreciate it so much. Pac-Man, absolute pleasure, man. You know, I give so much alpha and education inside of the Legends Pro community as well. And I mean, today was a good trading day for all of us, okay? Just nailing these trades, right? Both, the only 2 trades I highlighted today, both played out to perfection. So, and you know, quite ironic that I started off the day by saying, guys, I don't really feel like just providing a trading setup for the sake of trading. So I'm going to try and look for the highest probable trades. And then both of the trades I highlighted today played out. So, wow, if you did jump into both trades from a shorting and a longing perspective, well done. Okay, you should have a very successful trading day under the belt today. And right, some days it's easy, and I mean, even with this complex corrective structures, some days it's easy, some days it's difficult. Okay, and even with this complex corrective structure, it's been, you know, a very good, successful trading day. So I just want to see. I've got so many folders I wanted to go through over here. So little time. Always so much to talk about and so little time. So this is the one that I've discussed to say that, well, potentially the top is in and there is a way to count it to be finished. You have a W, X, Y. Done. Right? And we're starting to build impulses here to the downside. Okay, if we form a 5, basically simplicity, if you take that high, probabilities increase to take the high and move higher. Okay, right. Which brings me to other structures. That was the contracting diagonal that we traded this morning. This was another scenario that I was looking at to say that, well, what if, guys, you can see there are so many scenarios. What if we claim the low? Okay, or just front run the low, like it looks like you're going to claim the low, but you don't. It could also be a B, C, and a W. All of this mess here is a X, and then we go back up for a Y. W, X, Y. Okay, also a possibility. Doesn't carry the highest probability because of how deep the X is. Okay, you don't really want your X to retrace this deep, especially claiming the low of your W and then still have a Y that claims the high of W. Anyways, but it's never, and this is why I don't even discuss these structures typically on a live stream. I just want to show you guys what I always have in my folders that I don't even talk about, because sometimes they carry such low probability for me, I don't discuss it, because the more scenarios I go through, it can create analysis paralysis. Now, which way are we going? Okay. So that was one scenario I was looking at. We had this bullish case scenario over here, which I think now got invalidated because we tapped the invalidation. Okay, let me go here onto the 15-minute time frame. This was another scenario, and this is the beauty about having invalidations for each scenario, because as soon as you start invalidating scenarios, then you have less and less and less and less, and then you can pay attention to the scenarios that are still left over. But here was a scenario in an A, B, C to the upside. Okay, and inside your C, you want to see a 1, 2, 1, 2, 3, 4, 5, 4, 5. Here was the invalidation, and now we claimed the invalidation, so no more. I can delete this now. Out the bin. Okay. What else was here? There was the expanding that I spoke about. The expanding, it was the AB. Oh, I thought I deleted this. Okay, let's delete. There we go. There was the local WXY that I've discussed. There was the contracting that I discussed. Ooh, there was more. There was more. Can this one still be valid? There's a chance that the C wave is also in and then just a normal ABC. Okay, there's a chance. But this corrective structure, WXY, ABC, it's the same. Okay, you don't want that high to be claimed. You want momentum to continue to the downside without taking that high. Right, what else was there? That was a contracting diagonal. Yeah, okay, this is actually worth talking about, guys. Bullish case scenario. Dewald, what if we don't claim the low? Okay, so now this will support a bullish case scenario. Is that what if we claim that pivot and we move higher? Remember, guys, this contracting diagonal that we spoke about. 1, 2, 3, 4, 5. A, B, C. Okay, this could potentially now be another 1, 2, 3, 4, 5. A, B, C. So now you have a 1, 2, 1, 2, and we're going up here for a third wave. The scenario does not carry high probability because of a mistake or something that happened over here. Okay, which I don't like. But it's not an invalidation. It just lowers the probabilities. When I take a time fib from the low to the high of 5, this low was made before the 0.382, which is not ideal. So I haven't deleted it. There's a chance that this could be a 1, 2, 1, 2, and we're going to rock and roll here to the upside. Okay, but I mean, I don't like that. Anyways, but it's still in my folders and it's not been invalidated. Just want to throw that in there as well. Okay, yeah, that one has been invalidated. I can delete that. Okay, I think I've basically covered everything. I just wanted to make sure that I've covered everything over here. Right, I think I've covered everything now inside of the structure that I possibly can see potentially playing out. Right. Really appreciate all the education. Absolute pleasure. Appreciate like always, but that's not invalidated BC. The B wave can be any structure. A B wave can be any corrective structure, but it has to be a 3-wave structure. So I'm not sure which B wave you're referring to. Okay. However, if Bitcoin needs to rise, it should break the high time frame trend line. High time frame trend line. Oh, this one. You're talking about this one. Yep. Okay. Also, something that I want to point out, very interesting. Okay, is that I can go and psychoanalyze what is going on here on the smaller time frames. The larger time frames are always better to get an understanding of, because larger time frames are always more accurate. They take longer to play out, but technical analysis becomes more accurate the higher the time frame is. Okay, so theoretically, I could say that I don't care what's going to happen over here. I don't care if it's impulsive, I don't care if it's corrective, whatever the case might be, you could still be in that. I mean, we've spoken about this, guys. Do you guys remember this? Do you remember this? There's still a chance that this is going to go and play out. It's still in play. The harmonic that I've highlighted, it's still in play. Okay, and the first profit, or the according to theory, the first profit-taking area is the 618. And it's all the way here by the trend. Okay, there's your 618. So it could get very messy up and down here and maybe still chop the way that it's been chopping, taps this level, rejects, and then it falls down. And then your harmonic played out to perfection. And whatever happened here is an X wave, because I know from experience that X waves can be extremely complex. Okay, this is what I mean. If this is a W and this is an X, and let's say it's still going to punch higher to the upside, and then it's going to form the Y. X waves in Elliot wave theory, you can go and Google this, you can go and search for it, you can go and do some research here on, okay, the website that I use is this one. Elite Currency. It is extremely comprehensive. It goes into all the possible scenarios, Fibonacci levels, contracting diagonals, expanding diagonals, how to draw parallel channels. I really refer to this often. Okay, here you can see they talk about contracting diagonals that I often talk about as well, where it needs to reject. They show you the Fibonacci levels, the most common Fibonacci levels, what the structures needs to look like. You get 3-wave structures, you get 5-wave structures, you get expanding. Okay, this link looks like it's broken, but you get expanding structures, which is very rare, never preferred. It will explain to you the probabilities. Okay, so I mean, this is the website that I use for reference. But basically, what I was trying to say over here is X waves can be extremely complex, corrective structures that is very like you're scratching your heads. Okay, W is usually a very easy structure. A, B, C. It's such an easy, beautiful looking 3-wave structure. You get this mess that creates the X. Okay, and then maybe you get another 3-wave, beautiful 3-wave. A wave, A, B, C, 5, 3, 5 inside of your Y wave. Okay, so there's a chance that price can still chop up here until it gets to the trend, and then it rejects miserably and falls to the downside. So from a simplicity perspective, on the larger time frames, you're like, okay, well, I want to see what's going to happen over here. Golden pocket, trend, is this going to be a breakout or is it going to be a rejection? Depends on what time frame trader you are. Okay, do you want to place 1 trade a month? Do you want to place 2 trades a week? Do you want to trade every single day? Some people have a 9 to 5. Okay, so you can only look at the charts maybe in the morning or in the afternoon when you get home from work. So maybe you need to focus on larger time frames like the 1 hour and 4 hour. Maybe you're a scalper, you have a lot of times available on your hands, or you do a type of job that you can afford to look at the charts the whole day. Then you can jump onto the 15-minute, 5-minute time frame. So, I mean, you know, this looks tiny over here, guys. This is tiny. We played a long and a short in that little tiny zone over here. And then you get traders that they are interested in bigger moves. They want to play the bigger moves. They want to play these moves. It takes way longer and a lot more patience. This is swing trades, right? I know myself well enough. I don't have the patience for this. You have to learn your personality as well. Do you have the patience to wait out these trades, okay? Or do you want to get in and out, in and out, in and out? Are you a scalper? Do you want to do 10, 20 trades a day? Okay, for me, I'm happy with 3 trades a week. I'm happy. That's my happy medium. It's 3 trades a week. I'm very happy with three successful trades a week. Very, very, very happy. On average. Amazing. Yes, the structure you deleted. Oh, the one that I deleted. The structure you deleted. The ABC. Oh, well, now that I've deleted it, I'm not going to get it back now. You're talking about, I think I had this as A, B, C. Not sure if it's that one. You have a 3-wave in B. 1, 2, 3. You have a 3-wave. You have a 1, 2, 3, 4, 5 in a expanding or contracting diagonal. You have a 1, 2, 3, 4, 5 in a C. Okay, that can be an ABC. Definitely. I'm not sure if that answers your question. Okay. Nope. The less you trade, the lower the fees. Yes, you know, and there's something that someone also once told me, a very successful trader once told me, is to say that, Dewald, you don't make more money the more you trade. You make more money the higher the probability of the trade that you do decide to enter. So, in essence, if you take 5 trades a day versus someone that takes 1 trade a week, the person that takes 1 trade a week could make way more money than the person that takes 10 trades a day. Okay, because that person that takes only 1 trade in a week could be waiting for this setup, and he will only pull the trigger when all of the planets align and all of his boxes are ticked. Okay, which means it gives him higher probability, most probably an increased win rate, and he plays bigger moves as well. So it doesn't, you know, more trades doesn't equate more money. Right, but funding rates matters for swingers. Well, it depends on how large the move is. It really depends on how large the move is. Yeah, and I mean, you want to trade on an exchange that has lower fees as well. And right, and this is why I have bought the week's native token, WXT, I think it's called. I didn't buy it from an investment perspective. Okay, when you get discount, because you get 25% discount just by using the link. I think I get 70%, 75, I can't remember exactly, 70 or 75% discount because I own the native token as well. I think Mexi does, well, any exchange, Binance does it, Bybit does it, Mexi does it, Weeks does it. If you buy that exchange's native token, you qualify for bigger discounts on your trading fees as well. So I like to do that. So when I signed up with Weeks the first time, I saw that the native token was dirt cheap. So I bought a bunch. So I get nice big discount here on Weeks by owning the native token. And it's not from an investment perspective. It's just so that every time I place a trade, I can, you know, I pay lower fees. I can't sleep if you don't have over a dozen trades. Red Bull gives you wings. Woo! I got some die-hard people here. 786 is looking tasty, Dewald. DK. Are you talking about the 786 here to the downside? This one? This one? Are you talking about this one? 786? Are you talking about this one? Well, I mean, it's definitely worth an attempt depending on how price reacts at this level. Definitely worth an attempt. So if price falls down here and I get that reaction, it's worth a trade. But I mean, I would love these lows to be swept. It's just, I can just see the liquidity. I know the 0.88, because often what happens, guys, you know, I can make money from these small little moves. Price falls down. Okay. I enter a trade with my stop below the low. often what happens is it comes back to the golden pocket and then it takes the low. But I can make money with that little move over there. Right, legends, I think I have gone through all the scenarios that I could potentially think of over here. I thought I had a lot more scenarios. I think it's just based on the amount of work I had to put in all these scenarios. The 786 from the top. Oh, the 786 from the top. From this top. Oh, yeah. 786. Yeah. Definitely. I mean, look at that, right? I like that. Purely from a price action perspective, that is beautiful. If price had to come up here, breaks the trend, people think we're going into a bull market, and then it rejects and gets it, and people, it's a deviation. But, you had the level to play the short, right? But as long as price stays above the trend, maybe it consolidates against the trend. There's another bull flag, a bull flag building here, and it continues to the upside. Okay, it's just for price to start the bull market to continue to $130,000 from here. Looking at this structure, it just carries low probability. It's fine if it claims the high in a B flat. Okay, because remember, guys, I kept on saying that this structure looks corrective to the downside. And now I'm also saying, well, this looks very corrective to the upside. So you could have an A, B that claims the high, and then a C to the downside. But all of this is part of a corrective structure. For this to be the end, and we are just going to go to $130,000, $200,000, $500,000, doesn't make any sense to me. Because there's two big reasons for me. The biggest reason is time. Okay, let me explain. If I look at this entire structure to the upside, okay, and I take a time fib from the low to the high of the structure, it's not time yet. Because some people will say, but you don't need a deep correction. I agree, you don't need a deep correction. But time is the most important factor. You have an impulse, you have a correction. If I take a time fib from the low to the high of the structure, you can see that this low, or even this low, was made after the 0.382. This low was made after the 1-to-1 extension when I measure this impulse with a correction. Okay, and I can apply the same method with each structure to the upside. Okay, each impulse needs to correct itself. Impulse, correction. Impulse, correction. Impulse, correction. Now you might say, well, Dewald, impulse, correction. Yes, there's a chance that this impulse has corrected itself and it could take this high again and then fall back down again. And then I will take my time fib from this low to this high. Okay, there's a chance that it can do that. But to continue the bull market aggressively to the upside, it's not time. So if we form a WXY or an ABC, then you can see, and you start, price is trading over here, still at, a higher low. But from a timing perspective, it's past, let's say it's past the 19th of June already, and price is still here. This is where it becomes interesting, because you have to remember, at some point, each impulse has to correct itself, right? But then when you form 5 waves to the upside, 1, 2, 3, 4, 5, when you have 5 waves to the upside, this impulse also has to correct itself. And this impulse, the correction, is too short. I hate to say it. Okay, this was not the low. If this is the top, this is not the low, because it's not time yet. Okay, the second reason, and this was the most important reason to me, is if this is the top, it's not time yet for the bottom to be in, for the correction for this entire structure. It has to at least, and this is the minimum target, it can go to the 0.618, it can go to the 1-to-1 extension, it can even go to the 2 extension. It can really carry on sideways, okay? But the powerful thing about time is that the longer the correction takes. So let's say it does this and it just does this. The longer it takes in time, the higher the probability, okay, that you are going to move up aggressively, claim the highs, go to much higher levels, while price is still in higher low territory. If price had to aggressively just fall here to the downside, okay, let me explain. Let me just take this out the way. This is usually where I know a structure is also going to turn around just based on time. If price just had to fall here, and it made an extreme low over here, way before the 0.382, I would have said there's a high chance that this structure is going to come and claim this low. Because look at where this low was made. We haven't even finished it after the 0.382. If you fall this aggressively before the minimum requirement and you're so close to the lows and you still have to make another low, you're most likely going to claim the lows. Okay, so it can work both ways. If I don't trade, I can't sleep. Rudy, welcome, man. The level of education today was ultra plus. Absolute pleasure, Rudy. I'm glad you've learned something. The man must be running on Duracells. Right, legends, remember to smash up that like button. The links for the exchanges and your way to support the channel where you qualify for the biggest sign-up bonuses and lowest trading fees are always down in the description. Bluffin, BTCC, Weeks, okay? Also your way to support the channel. And until the next one, cheers for now.